Hello, Sunday. I'll start this with a comment. I don't know why I'm particularly making the comment, but I'll make it anyway. That you can take as a rule of thumb that these market people, these investing people, will generally buy more bonds if they think that the economy that they're investing in the foreseeable future is going to be crap. If they think it's going to be crap, they'll buy bonds. If they think the economy that they're investing in the foreseeable future is going to be good, they will buy equities. Rule of thumb. Did I want to say more than that? No, I didn't. Just as a start-off thing. Right, Gillian Tett, Financial Times. I've talked of this once and I'll talk of it quickly once more because Gillian's talked of it. But that little noticed tag has quietly had a big impact. Until it was introduced, the FDIC only guaranteed the first $250,000 worth of bank deposits, meaning that if companies or consumers had accounts holding more than that, they lost money if a bank collapsed. However, under TAG, the FDIC protects an unlimited amount of money. If that is deposited in a non-interest bearing account. Now that's quite interesting that they decided it was only on a non-interest bearing account. That at the height of the crisis, that FDIC with Fed Treasury backing, all that sort of stuff, said we'll guarantee everything, and that was TAG. What has happened since then, since I think it was 2009, early 2009 or late 2008 anyway, that $1.5 trillion is languishing in TAG covered accounts, which are non-interest bearing accounts. And this comes off, just like the fiscal cliff things, at the 1st of January. Now there's a big question going on where that money is going to go. And you can kind of link it into my first thing, that if the people think the economy is going well, they might invest it in equities, but it's highly unlikely. They could invest it in bonds, which is much more likely, not so much because the economy is going to be crap going forward. It's because the state of the economy obviously isn't the only factor for where you put your money, equities or bonds, and there are many other options. But there are lots of people out there, pension funds, insurance companies just as examples, but companies as well, that their money people are guaranteeing to their CEO boss that they will keep a certain amount of money for the company safe out there in the world. So they'll keep it at the moment in a tag account, and there's no interest on it, but it's perfectly safe and available for the company if needed, because so many companies were caught out in 2008. So where's that money going to go? I'm kind of saying this for gold. I don't talk about gold much, but gold is range bound in its value, or the amount of money that's paid for it, and has been for a good long while, a year or so anyway. And that seems to coincide with the peaking out of the central bank's balance sheets. The balance sheets went uppity up, and they've been going flat for a little while. And the fact that the Fed is keeping interest rates just about positive. The rumour on the street is that if the Fed let the interest rates on Treasury bills, the very short-term ones, go negative, then things like gold will go up in price because it's a decent option in compared to a short-term bond, which are called bills. Because you're going to lose money if you're paying over the odds for the price of a Treasury bill, and because your coupon's below zero. People are accepting negative amounts of interest in other parts of the country, even in the other parts of the world, even like Belgium. They'll accept negative interest on their investments into government paper. But the Fed pays interest on accounts So banks don't want to go into negative paper. They'd prefer to keep their money in the Fed at 0.25, just about positive. And the Fed runs Operation Twist, which is they buy the long end of the yield curve, the real bonds, the 30-year, 20, 30-year bonds, and keep that interest rate down. And they sell the near end, the bills, out into the market. So the market is oversupplied in bills. So the supply and demand, there's plenty of supply, so they're not bid down under zero. Anyway, I don't know why I went into that, because it's all fantastically interesting for a Sunday. Right, let's go on to California. I'm putting this in because, and it's got no great... I think it links up quite a few things that we've talked about over the last couple of weeks. And it's California and their crime. Over the last few decades, well, going back to the 50s. And these were arrests per 100 Californian youths being 10 to 17-year-olds. And if you look down on the far left there, it's decades, the 50s, 60s, 70s, 80s, 90s, 2000s, and then it goes 2010, 2011. So the next column along is all, and you can see that it started off relatively badly in the 50s, and it was worst in the 60s and 70s for California youths between 10 and 17 being arrestified for various things. So your mind goes drugs, doesn't it, straight away? So to follow your mind, we've got to go second from the right column, headed drugs. And you can see it's the 70s where more people were arrested. Those youths were arrested. 1,000 per 100,000, so just over 1% were arrested for drug crime in the 70s. And then since then, it's basically come down to 0.6, then 0.5, stayed at 0.5 all the time until now, 2011. It looks like they are ending the arresting for drugs because it's come down from 546 to 288. And we can go along left from drugs if you like. Well, I'm going, so you might as well follow me. Property, I imagine that's breaking into people's houses. 1315. The worst decade was the 70s, and then it gets better and better. Rape to the left, the worst decade was the 70s. Was that right? Yep, rape's the 70s. Homicide waits a while until the 1990s to be the worst decade in the 1990s. Violent crime the same, so that was just the start, I would think, of the 3 strikes and you're out, was it? I don't know. Anyway, that seemed to end it because homicide went from 13.8 to 4.6, 4.2, 3.1 now, and violent crime went 585 down to 384. Felonies were worse in the 70s and have just got better and better. Quite interesting, all in all, that California is getting cooler and cooler place to be at. Much less crime from the youth of California. Over the Atlantic to the United Kingdom, and they've just had a budget. All passed and all done in English fashion, British fashion, not argumentative sort of messing about like the Americans do. The Treasury, the people that do the budget things, have got the OBR overlooking their shoulder now down onto their books. Office of Budget Responsibility, I think it's called, and it's kind of meant to be independent, looking at the government figures to see that they don't fiddle them. It says at the top of this one, as the chart below demonstrates, this time last year, the OBR expected growth over 2012 to 16 to be 12%, whereas now it expects just 8.3%. And you can see that the red line was what it thought it was going to be in November last year, and 13 months or 12, 13 months later, it's a lot less. And it's just showing that if you're an official forecasting body, you always seem to be optimistic. Well, on this chart, again, OBR, you can see by the... well, you can't because it's not an OBR chart. It's made from OBR information. The writing at the bottom says, during its own lost decade, the Japanese economy grew by 11.9%, a disastrous result over 10 years. And that was 1991 to 2000. The central forecast of the OBR is now that the UK growth over the decade 2008, from the start of the crisis, to 2017 will be 8.7, a lot less than Japan was. And you can see on the chart the blue, we're 5-6 years into the crisis on from 2008, and it's now that it starts kicking off upwards. In blue there, the OBR says from now the economy in the UK gets better and better, and even so at the end of those optimistic ideas, it's still well underneath what Japan managed in its lost decade. So OBR says if we're very lucky, we will still be a lot short of how well the Japan did in their lost decade. Right, I'll read this because I think it's an overall point that can be made if this austerity thing keeps going. Rate of undeclared labour soaring as recession bites. Another negative aspect of the deep recession that the Greek economy has been has been stuck in since 2008 is the rapid growth in undeclared labour. I'm not going to be able to read this, but what happens is if the people lose faith and touch with the government, they will go and do their own things. And various countries, you can imagine what Japan would do, what America would do, what the UK would do, what France would do, what the Mediterranean countries would do. If austerity is forced down upon them, they will generally try and slip out from the government and do their own thing. And the government needs the people always to be dependent on it to maintain that plugged-inness from the people to the government, for paying taxes, for not breaking the law, etc., etc. And that bond can be broken very easily, and austerity is an ideal way of breaking that bond. Right, I'm going to have a drink. Bye.